Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. Today's Thursday. It's October 12th. It's about 7:50 in the morning. And I believe, finally, for the first day since Monday early morning, I'm turning the corner. I feel human again. But I am highly volatile. You got to watch out for me today. You can't make this stuff up if you try it. Anyhow, as I mentioned, it's about 7:51 in the morning. The market's going to gear up to open up in about an hour and 39 minutes. Please subscribe to our YouTube channel, subscribe to our Telegram channel, and don't miss our VIP room. All that information is below the video. I'm not going to even tell you where it is. You could find it. VIP room is at 11 a.m. today, and we're going to have a nice little earnings section. We're going to go do a deep dive into sectors, and as usual, I've got the hot stocks for you guys. By the way, yesterday I gave you a couple of stocks, ANF. It did pretty good. Most of the stocks did well. I gave you a short stock yesterday, Arrow, Zebra, KLIC. Take a look at how those stocks have done overnight. Anyways, as you can see here, the Dow's up about 118, about 120 points. The Nasdaq's up about 55. This is just a hair, and I mean a hair above randomness at these price levels. As you could see, everybody and their mother is waiting for the CPI report, Consumer Price Index. We had the PPI yesterday. It was hot. It wasn't as cool as I'd like to have seen it, but the market brushed it off, probably due to the fiasco in the Middle East and the fact that the Fed is close to the end of the tightening cycle, not the beginning, and they may even step back a little more because the turmoil in the Middle East may expand. Now, we're looking, and this is an important number, we're looking at X food and energy. We're looking at 4.1%. If this number is above 4.1%, we can have some problems. We could have some trouble, okay? Year over year, they're also looking at a lower number, but not much lower. I mean, they keep saying how inflation is, how it's working. It's stickier, as Jeff Smith said the other day, stickier than his barbecue sauce. X food and energy year to year, 4.1%. I'm hoping the number is up around this level. I'm hoping it's not 4.4. That would be bad for the market. Now, looking at the sectors, which I want to take a look at right now, just to kind of give you an idea of what's happening. And I'll get into sector watch in a bit. We're going to a 3-week because the 3-week gives us a pretty good perspective right here of where we're at. And you could see here, communication, technology, QQQ, which encompasses these two plus consumer discretionary. Industrial is starting to come up. Industrial and building is starting to come up. Healthcare is up there. Retail is up there. But you could still see consumer staples and utilities and real estate, financials, and even energy are just not that strong right now. That's not where the market cap is. They're not in play, as I like to call it. So you definitely want to stick for the long side to the most bullish sectors and to the short side to the most bearish sectors. And we'll talk about the top stock in the communication sector today. And I'll give you my 5 cents in a little bit. But as you could see here, look at communication just going boom, rallying nice and strong. Technology breaking up to the upside. QQQ, obviously, it has these two in consumer discretionary. But even industrial stocks are looking. But the problem is, if you notice, this trend is not very, it's moving along a very, very steep downtrend. So we got to be very, 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 very cautious. Although not much has changed in market environment, but you could tell the market wants to go higher. Now, are we getting ready for an end-of-year rally? Possibly, but I don't think so. I don't think we're there just quite yet. Looking at the bond market, as you will see here, my point is we're moving higher, but we're moving higher against a pretty strong downtrend. So be really, really cautious. Very similarly to what you're seeing in the bond market is what you're seeing in the stock market right now. For example, take a look at, well, why don't we take a look at industrial? Look at this. You see? Up, down, 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 up. So right now, if we're looking at the relative strength on a short-term basis, this looks really strong. But when we step back a little bit, it doesn't look all that great. So you got to be very careful because, for example, if the bond market right now turns back down, this can cause stocks that like lower rates to move down as well, and this becomes a downtrend, very much like this. It looked like it was right here. Let me show you. It looked like it was starting to go up, right? Like it's the beginning of an uptrend. and then this happens. Well, the same thing can happen here. This could look like it's moving higher and it's above the 200-day, and then it can come down. So be really, really cautious with your sectors right now. Let's talk a little bit about the news. We'll bring everything together. But today, the CPI is the big number. Now, why am I not talking about jobless claims? Because jobless claims have been a nothing burger. There's been absolutely nothing going on here. The number has been fantastic. Instead of moving higher, it went up to quickly to 275. Now it moved back all the way to the low 200s. It's even lower than the average of 222, which we had for several months. So I'm not really concerned about jobless claims. That's been really, really good. Petroleum status report, I don't think it's going to be a major issue because we have global events driving the market right now. Tomorrow we have imports and exports, and we have a bunch of Fed speakers. But let's talk about the market, and then I'll do technicals on the SPY, QQQ, talk about the best ETF, maybe give you some options too. And by the way, I've been giving hot red meat trades on the Telegram channel before it becomes the day trading channel, switches over. We're going to open up a new Telegram channel for the day trading program. All those alerts you're seeing now are going to move over there. It's not going to be as busy. But if you're liking them, subscribe to our Telegram. If you haven't seen them, subscribe to our Telegram. If you like them, give us thumbs up on Telegram. It's rogerscott.com/Telegram. And as soon as you join Telegram, it's free, doesn't cost anything. Just click the link in that box and you'll be signed up for Telegram. So U.S. Treasury yields continue to fall, which is giving the market a nice little boost ahead of consumer inflation report, which is coming out today. We've got minutes of the Federal Open Market Committee meeting revealed that most Federal Reserve policymakers found it appropriate to implement one more rate hike and stress the importance of maintaining higher interest rates for an extended period of time because, as Jeff Smith said yesterday, inflation is stickier than his barbecue sauce. I believe that. Alphabet, Meta rose. I told you they were looking really hot. Nvidia is looking pretty good too, but that's for another day. Baxter International, we shorted this yesterday. Yes, we made some money on that too. Christopher Waller stated Wednesday that the U.S. Central Bank could watch and see what happens before making additional decisions. That's exactly what I would say, particularly as financial markets tighten. Right, particularly as they tighten. Now, Atlanta Fed Bostic said U.S. Central Bank should refrain from further interest rate hikes due to numerous indicators suggesting a slowing economy. This guy's talking about a slowing economy. This guy's talking about a tightening labor market. Again, U.S. futures are now pricing in. They're only pricing in an 8% chance of a rate hike in November. That's just not going to happen. That's unrealistic. But only a 26% chance of a price hike in December. That could be. I guess I was a little too critical of that, but I guess they're thinking if they can raise rates in January or February, what's the big deal? You've got earnings coming up today, and I'll talk about earnings. I got a report. I'll telegram it to you in a little bit, actually. And earnings starting today. We got Domino's, a little Fastenal, a little Delta. Watch out on airline stocks. Walgreen Boots, consumer staples there. But you got to keep your eye on bank stocks. That's what's really, really hot this week. You've got tomorrow, BlackRock, Citigroup, United, and Wells Fargo right there, Wells Fargo. So tomorrow, bank stocks are setting the tone, which is why you need to keep your eye on the financial sector very, very closely, which isn't doing all that great if you want to know the truth. See, rallying, but it's below the 200-day moving average. I mean, we could see this and then come back down. So I would call this more of a choppy environment than a breakout runaway market at these levels. You know, just a lot of choppiness here. Don't read too much into it. Just choppiness and price discovery. You also want to look into the banking. Let's see, regional banks, regional bank sector. That's important. They will be impacted, and this thing has been in a downtrend. So be really, 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 really cautious. Let's go back here. Again, we're looking at consumer inflation. We're looking at core. We covered all that. We got crude oil inventories. I don't think the number's going to be all that crazy. Europe this morning, investors digested solid UK growth numbers while, got a little refresh there. Oh, erased all my stuff. Look at that. Look at that. Erased all my stuff. How could that happen? Let me try to update it again. Let's see if it, nope, erased my stuff. Oh, well. Fortunately, I know what I'm doing. Digested solid UK growth numbers while awaiting the release of US CPI data. They're keying off of us right now. China closed higher. Good little tailwind back as moved by Chinese sovereign wealth fund, not health fund, Central Hujing. Yes, Hujing. Investment to increase its stake in the nation's biggest bank for the first time since 2015 boosted sentiment. That's pretty positive. I like that. That looks good to me. Japan closed higher. Tailwind from Japan as investors continued to scoop up beaten down stocks. Chip stocks taking the lead on a rally. I like that. And you already know what we're watching for today. Fastenal, Delta, Walgreens, and Domino's. And CMC. Oh, I didn't know CMC is coming out. That was one of the stocks I recommended. Actually, no, I recommended CNC. This is CMC. Okay. I don't want to get too dizzy. All right. Now, looking at the charts. Let's take a look at the charts. And again, folks, I'm sorry. It's been a really rough week. My assistant, Matt, still can't hold solid food. So it's hard for me to get my data going till he's back. But we've been rocking and rolling. You can see that the SPY is reaching for the 50-day moving average. That 50-day moving average can increase the volatility. Markets like to cross the 50-day moving average. If we do cross it, I don't know if we will. We have this resistance level right here. If we move through this resistance, we can have a nice rally. Volume's been pretty healthy. But again, we're below the 50-day moving average. So and we're in downtrend. Now, this is a descending channel. If we break out, it could lead to a nice rally. QQQ is looking a lot better. It's more flat, and it's got a flat top. It has less interest rate sensitive factors than the Dow Jones or the S&P 500. It doesn't have the consumer staples. It doesn't have the healthcare. It doesn't have the financials in it. It doesn't have all of that. It has more tech, consumer discretionary, and communications, and those stocks are all reaching for 52-week highs. Matter of fact, take a look at SMH. It's looking pretty good, right? It's looking pretty good. Take a look at NVIDIA. So these stocks are definitely seeing some upside right now. Meta, they're definitely seeing some upside right now. Matter of fact, I'm going to make a recommendation for two stocks today. I'm going to make a recommendation for Google and for Meta. Those are my two stocks that I'm really liking right now. And my favorite ETF is XLC, the communication sector. As a matter of fact, we're long right now, XLC in the Bargain Hunter Fund, and I think we're up about 75%. And I like how it's looking right now. It may rally a little more today. If it rallies above this area, it could take out the high. And I like how volume is increasing here. So there's absolutely no reason to liquidate this position right now as we speak. Now, as I mentioned, we've got earnings, so we've got a lot to watch out for today. We've got the CPI. I'm going to be talking at 11 o'clock for my game plan, and I'll be updating my Telegram channel all day long. Keep an eye on it. Right now, XLC is where you want to be. Now, I'll give you an option. Don't be afraid to buy into strength. It's got 8 days left. If it doesn't continue moving up in the next 2 days, don't stay in this baby. You want to be in the 69, no, you want to be in the 60, you want to be here. Ooh, they're not that expensive, but they're not all that liquid either. I don't know, maybe the market has to open. Doesn't seem like there's any liquidity there. Yeah, market has to open. Market will open, and you're going to be paying for the 67.50, roughly $1, maybe 67, you can go $2, but here are the prices. They will tighten up and the spreads will get tightened once the market's open. But communication is where you want to be right now. Now remember something. I'm going to be broadcasting trades, hot red meat, before we move into the day trading channel. You still have another week, maybe a week and a half. You don't want to miss out on that. It's a gold mine. We've been yielding 5 to 10 points a day net. Yes, we have. Take a look at my time and sales, and you will see for yourself. We've been blowing it out of the ballpark, and I've been doing it from my bed as I've been sick. So it's been a pretty interesting time. Got to keep myself busy somehow, right? Now, folks, I got something to tell you. Before I do, make sure you come to the VIP room at 11 today. Subscribe to my YouTube channel. If you don't know where, go to YouTube and then go to Roger-Scott. Roger-Scott in the search. You could find the Telegram channel in the YouTube video below this video. And most importantly, before I forget, it's Thursday. So it means today's the day. It's right. Lance Ippolito will issue his very first perfect Tesla trade alert. Lance has discovered a market irregularity that's specific to shares of Tesla. And when leveraged the right way, ba-boom! Yes, ba-boom! And if you think I know how to trade Tesla, we had some good profits, you should see Lance. Lance, he's good. It's shown the ability to pay out returns of 100% or more in 6 days or less. In fact, according to his data, it's happened more than 20 different times over the last year. Now, Lance is going live at noon Eastern. So if you're ready to hear all about it, click the link below and save your seat. Then get in on your very first perfect Tesla trade today. Don't miss out, and I'll see you at 11 a.m. As you could probably see by my appearance, I'm starting to come back to life. Thank you, thank you, thank you for all the wonderful emails, the letters of support, and the t-shirts. I've been getting my birthday t-shirts. Yes, I'm highly volatile today. I'll see you guys later. Make sure to post comments below this video. I love them. They keep me energized throughout the day, and I'm excited. I'll see you guys later. If you have a question, roger@rogerscott.com. Bye.